What's going on, everybody? It's your boy C-Zar, and today we're talking about Bitcoin, BTC USD. It is the 17th day of June. We have about 11 hours left in the day, sitting here at $64.9 thousand roughly. Hit that like button, subscribe. Thank you all for being here, and let's get into it, okay? Before we get into the short-term stuff, I want to just look at this on the daily time frame. From the high of last month, May 6th, to the low here of June 5th, we have found direct resistance at a few different areas, okay? And I want to, but before we get too much further into this, I want to be clear. It's completely possible that we do go below this low from here. We could see a move that takes us below this low. It's completely possible that we go below this low and we are still in this consolidation phase that perhaps inevitably takes us to 72, 74K or somewhere in that area, at least to higher levels than this. It is completely possible that we are not breaking out to dramatically lower lows, yet we still do see a lower low here, and that we still climb, relatively speaking, over the coming month, month and a half. I do suspect late July will bring the breakout move that we're looking for, or sometime in August will bring that breakout move, okay? Anyways, from a low to a high, the 382 is where we found direct resistance. We actually went right up to that area and tipped it. Typically, you don't wick and find resistance there. That's not typical. Most of the time that happens, it's in very bearish circumstances, which, to be fair, we do have bearish circumstances, and that typically does promote lower lows, just so you're aware. There's still a chance that we could find support at the 236, prior resistance here, and then continue to rally higher. It's very common to go from your 382 to your 236 and then up to your golden ratio, or maybe to your 0.5, 382, and then your golden ratio like this, however it works. But typically when you see higher prices, you'll wick above the 382 and you'll close below it. I know it seems like a completely irrelevant distinction, and I would say that sometimes it is, but a good bit of the time, whenever you do go lower, you do see this direct resistance like this. And what I mean by lower, again, is just that slightly lower low. So that's something I want you to be prepared for, whoever you are watching this. If you think that this is the low, that could get you set up for a few different negative side effects. Okay, the first negative side effect would be that you might be buying here instead of buying at lower prices, right? That's never a good thing. Second to that, if you're buying here, or maybe you buy it here, or your expectation is that this is the low, then what happens when we go below it? Most people will think, oh my God, we're going below it. We're going to see another move like this. So people will be projecting out that this is some type of bear flag and that we're going to see a move that takes us down to 54K or lower or something like that. When in reality, we very well could be finding a fake out, a true kind of double bottom overall, and working our way up from there. And people might get maximum bearish at the absolute worst time, all when we're near our low. You had the right idea the first time. It's just, maybe we see a slightly lower low first, and that's okay. That does happen. Anyways, be open-minded. That's the main point I'm trying to make here. Be open-minded. I'm not saying that we will go below this low. I'm just saying from here, I do believe we're going to go lower. And that lower price action could take us below that low. Actually, I want to throw that fib back on here. Again, it's very common to find support at the 236 after rejecting your 382. Okay, very common to find support at prior points of resistance. We had resistance there for about a week. $64,000, if that level holds, and we move back up here to this 382, it becomes more and more likely that that's a low that we can depend on, at least while climbing to potentially higher prices before, going down. But if we close, not if we wick below, but if we close a day below 64K, we can get to 63K today, tomorrow, whatever, wick there, and then close back above the 236. As long as we're closing above the 236, I would say that this is a valid low and that we have the potential, even the likelihood, to grow higher. It doesn't have to be immediate. It can be, but it doesn't have to be. It can do whatever it is. As long as we are closing above this, I don't have a problem with this being the low. But the second we close below 64K on a daily time frame, the odds of going lower will definitely increase. We look at this from and what do I mean lower? First and foremost, I mean below 64K. Second to that, going below 59K. Low to high here, getting rid of the overall fib from the May high to the June low, low to high here in this relative movement here that we've seen in June. We've gone below the 236 here, and it's very common when you go below the 236 to come down and find support at the 382, which just so happens to be, again, exactly at 64K. There's a couple of areas of significance there that might dictate support for us. And again, of course, prior resistance becomes support. If we don't hold support here, then it is likely that we go down to about 62K to $61,500, that golden ratio zone there, finding support at prior areas of support. And if we don't find support there, perhaps at the 786, 886 area, perhaps something of a fake out could come our way. Or if we are truly breaking down from here, we could see $57,000 to $54,500 come into view. I'm not expecting this. To me, this is the least likely target zone that we have as of now. But as we climb lower, and especially if we get a daily close below this golden ratio, these areas become more likely. Again, closing below 64K doesn't necessarily mean that we're going down here. But closing below that golden ratio opens up the door for that, okay? For now, being at $65,000, my thought is that we could go anywhere from 64 to $61,500. That is my expectation. And again, if we go down here, as long as it's in the way of a wick, and then we close back above 64K, I think that's okay. We can see some wicked volatility. That can happen. Anyways, let's get into the short-term stuff, see what's going on with the charts, okay? 1 hour time frame. What's XLM doing? Moving up a little bit. Consolidating here. Looking at this on the 1 hour time frame. Bitcoin does look like it wants to move up. You're putting in a little bit of a reversal candle here and moving up a little bit. It is we're within an hour from when the stock market opens up. Looking at this here, it's as if you've got lower lows, lower highs. Perhaps we come up when we find resistance here at about 66K before moving lower. That definitely could happen. Looking at the indicators here, the RSI is oversold. You're in a bit of a downtrend. Stochastics are oversold, coming out of the oversold zone in the MACD. MACD looks bearish overall. You're definitely in a bearish kind of phase here, but you are at the low ends of that. You could see a little bit of recovery, finding resistance at prior support, and that also would give you a lower high in the kind of context of this move down. So something around 65 to 66K, probably right there in the middle, if not closer to 66K, would be my guess. We might see that over the coming hours and then come back down. Again, for now, 64 to 61.5K is the ultimate target before we start thinking about anything that could be more reliable to the upside. 4 hour time frame here. The RSI is starting to slip for the first time since June 3rd, since around the time of our lows. We have broken out of this trend that we formed in the 4 hour RSI. That doesn't mean that we're just going to zero. That doesn't mean that we're breaking down to the oversold zone right now. It could be like that, but typically you do see some meandering in the 4 hour RSI and any RSI really. But of course we can just drop through the floor. Finding support at the 40 makes sense to me. 3 hours left. It's a brand new 4 hour time frame to see how it goes. But you are finding support in an area that makes sense. Stochastics are oversold, reset, ready to go. The 4 hour MACD is taking a bit more of a bearish posturing than we've seen since the lows on June 5th there. But you're still bullish overall. Perhaps you work your way down here. This would be the path that we would take if we were finding support at 64K. We just have a gentle landing here and we bounce off the zero level. That's actually very common to do. Finding resistance at the zero level, finding support at the zero level. So that could line up with us finding support around 64K, but I still think inevitably we'll see lower prices, okay? Daily time frame. Finding resistance at the 0.5, so you're at the 50. You found resistance at the 50 level on the RSI on the daily time frame. That is bearish. Finding resistance directly at the overbought zone on the stochastics, that's also bearish. And your MACD overall is bearish. So on top of all that, we're rejecting the 382 from this high to low by the way of a wick, just wicking right off of it. We've got a very kind of bearish environment right now in an overall bearish move. The idea that this is the low if you're thinking that the bear market's over, this is the low, we have a double bottom, it's time to rally, you're going to be not set psychologically if we see a lower low. What if it's a fake out? If you think there's no way that we go lower, this is the bottom, and then we see a fake out, you might initially be like, oh shit, I was wrong, time to go max short, time to sell everything, and then boom, then we pump, and we come back up above 70K, and then you're freaking out because now we're above this high. And now because you're emotional at the lows, what's to stop you from being emotional at the highs? You might double up on those losses and sell the low, buy the high. So just not financial advice, not a financial advisor. My thoughts are probably to stack cash, really. Not to stack crypto. If you're buying crypto, we're in the phase of the market now where anything you buy is for the long term. So you should be buying with the idea that even if it goes lower, I will not sell. I will only buy more or I will hold. Those are the only two options. I will not sell. But I still think it's a bit early for that. I think we're phasing into that environment for the crypto market as a whole, but I still think it's a bit early to be stacking crypto. I think we should be stacking cash at this point in time. That's what I was saying at the highs. That's what I'm saying down here as well, stacking cash. If you want a DCA in, I get it. It's a great price, but I still believe that over the coming months we will inevitably see lower prices. Yes, from here we could go lower, and we're probably going to consolidate over the next month, month or two, month and a half, however long. But I think sometime, come August, September, October, whatever, we will be seeing prices that are closer to $50,000, if not even below $50,000. We really will see some lower targets coming in. The bear market low is not in. The bear market itself is not over. We definitely have lower to go as time continues to move on. Anyways, that's all I have. I hope you enjoyed the video. Things look like they want to move down right now. Don't be swayed by any kind of movement to the upside over these coming hours. Sometimes we get some stock market open volatility, and I think that might be what we see here. So hit that like button, subscribe. Thank you all. Take care. Bye-bye.